Hello, Facebook and Instagram. It's Tamar Hermes here, giving you a forecast today. I have not done this in a while, but I decided to come on today and talk about what is happening in the market and can we possibly see a shift in the marketplace with real estate, because most people are saying there's no way that anything can happen with the supply so high and the demand with the supply so high and the demand so and the surplus so low, the inventory so low. How are we possibly going to see a shift in the marketplace? And that goes for any market. I'm talking about all markets, including Austin, including Los Angeles, including places that have been blowing up and increasing in value. And there's a couple things that have occurred to me recently, so I figured I'd go on and talk about that today. I've been talking about my newsletter. You can subscribe to that by linking in the bio if you're on Instagram. If not, you can get it through Facebook here. And what I want to really share is a couple of points that I want you to think about in terms of what's happening in the marketplace and how things can possibly shift. And the first thing that I think is really interesting has to do with loans. So right now, I just closed on a property yesterday, and I could prove in so many ways that I could afford the property, and yet they were running me through the ringer, and it's gotten harder and harder to get these loans. Also, interest rates are going up. Interest rates for investors have gone up because what's happened is that the Fannie Mae and Freddie Mac have decided, the government loans, those are the government loans, have decided that they do not want to support investors as much as they have been, because they're seeing investors take over the marketplace. They're seeing them buy up everything. And so they want to make it harder for investors and make it easier for first-time home buyers and people that don't have a lot of access to funds to be able to get those loans. So what they've done is they've put a limit on the amount of loans that they will give at 7% for each lender. And then what's happened that's made it even crazier is the interest rates have gone up. So I got a 3.65 on this property, a single family home, and I paid a point to get it. So when you pay the point, you have to also remember how long are you keeping the property for. So based on the math, significant, because any investor that's been having an easy time getting these loans, all of a sudden, in these low interest rates, all of a sudden they're going to be pressed because it's a lot harder to get them. So it won't be the same scenario as it has been. That can create a shift. That's already started to have some investors fall out of the investor pool because they cannot afford to invest right now. And the second thing that we need to look at is a shift that will help us in terms of being investors, which has to do with the forbearance and the moratorium. So many hi Julie, I see you on there on Instagram. So many investors now are are in forbearance or in a moratorium with their tenants, where their tenants haven't been paying the rent, or the moratorium or the forbearance is basically pushing the mortgage back. Now, some of you may be on a forbearance. It is something that happens with the way that COVID hit and what it did to a lot of landlords. But the thing to remember is that some of those loans are going to come due, or they're not going to be able to renegotiate if they don't have jobs or income to prove. They're going to have to be forced to sell the property, which will create more inventory in the market, higher interest rates, which is going to lower the pool in terms of who's buying. So there's opportunities there. And that's significant. That's probably, I believe, going to happen in the next 6 months when we start seeing the world's really going back to normal now. COVID is pretty much, it's still there, but it's kind of we're functioning, where it's a thing of a past. So we're going to start seeing the banks calling those loans or wanting to renegotiate with terms that also work for them as well as the owner. So I think that's going to force more homes and properties, businesses, everything into retail spaces, apartment buildings, everything into the space. So that's going to really help us. And that money, somebody said that money can be tacked onto the back of their loans. It can, but there's a couple things to consider in that. The money can be tacked onto the back of the loans, which is so true and a great option. But if I can't prove that I can pay the loan, then nobody's going to back it into the back. No one's going to give it to me into the back of my loan, because they're going to say that I don't have any income. So there is going to be, they're going to check to make sure people can afford, that people have money coming in. That's going to be part of the criteria, I'm certain. I can't imagine them. I think the extension for the loan will work for a lot of people, but there will be a lot of people that will not be able to work that out. That's great. I hear you, Molly. I completely understand. Molly disagrees with me, which is true. She might be right. No, nobody has a crystal ball. I just think there are going to be certain conditions where people will not be able to hold their homes. The third thing that I want to talk about, which is completely undisputable by anybody, which has to do with history. And history says that that markets do come up and down, and we have been in an upswing for about 13 years now. So it's inevitable that we are going to see some sort of historical dip. So that's just what I think. I think we can't argue with history. And I know the banks do help as much as possible, and the banks will support a lot of people. But I do think that there's going to be a shift, and that's just my prediction. I don't have a crystal ball. I'm just saying it based on what I see and what I believe is going to happen, and based on how it's been for me with the banks. Just getting a loan has not been a very easy experience, and I certainly can prove income. So if you don't agree with what the banks are going to do with the moratorium and the forbearance, but I think a lot of people do agree that there will be a shift. For sure, history is going to tell us that there will be something coming up. And that's one thing I want us to just think about, and I wanted to put out there. Nobody has a crystal ball, but history shows us over many, many decades that there is a shift that comes. So I wanted to just bring that into the space and see, get opinions and share and have a dialogue, and just open it up based on what my experience has been and what I'm seeing, having been in the real estate market for many, many decades, is that I do feel like we will see a change coming. And that is what I want to share today. So if you want to get on the newsletter, please go ahead and link in bio on Instagram or on Facebook. You can certainly just log in, and I'll put the note in there so you can get on. Have a great day, everyone, and thanks for tuning in, watching the replay, and I hope you get something out of this, and it gets you thinking and moving forward in terms of how you want to proceed. Like I said, I just closed on property. I've got a couple properties right now that I'm doing deals on. There's a lot of opportunities, a lot of deals right now. So there's always deals. We always just need to be looking and navigating. I'm just saying that I think that we will start seeing some shifts. Have a great day, everyone. Bye. Thank you for watching. I hope you enjoyed this video. Like and subscribe below, and you can find out more at wealthwarriorwoman.com.